This video presents you the instructions on how to complete your partnership income tax return for the year of assessment 2022 and 2023. Partnership income tax return or the PIT return consists of two main sections, Section 1 and Section 2. Section 1 is again divided into four different parts, Part A, Part B, Part C and Part D. Part A is for the income liable to tax, Part B is for the deductions from assessable income, Part C is for the calculation of tax payable and Part D is for the exempt income. You can see an identical image of Section 1 here. What you have to keep in your mind with regard to Section 1 is that each and every page of Section 1 is connected to a separate schedule. So you can't fill the pages of Section 1 directly without going into those schedules. Then Section 2. Section 2 is also divided into two parts, Part A and Part B. Part A is for the details of any approved accountant or any other person who has involved in preparing the return for a payment. Part B is for the declaration of the taxpayer. So in the case of the partnership, it is for the declaration of the president partner or any other partner. That is all for the Section 2. So you can very easily move with the Section 2. With all these points in the mind, we'll start completing the Section 1 of the return. So first we'll go into the schedules. There are 12 different schedules including the sub-schedules that are connected to Section 1. But don't get messed up with those schedules because although there are 12 schedules, they may all not be relevant in your case. Therefore, first you have to go through the list of the schedules and tick off the schedules that are relevant in your case. You are only required to complete the schedules ticked off by you and not the rest. Now, let's move into the schedules one by one. Schedule 1. Schedule 1 is just for the purpose of getting information. So, you just have to enter the names, respective TIN numbers and NIC numbers of the partners and the agreed profit sharing ratio between them. Schedule 2 is to distribute partnership income between the partners. There are two subschedules under Schedule 2. Schedule 2A is to record the tax liable partnership income and Schedule 2B is to record the exempt amounts. We'll first go into the business income of the partnership under Schedule 2A. Here, you have to make a further adjustment to the partnership business income or the partnership loss. In that case, you have to add back the payments made to the partners in their capacity of employee or any other kind of service provider. And also the interest payments made to the partners on the capital or any loan provided to the partnership by them. Use the columns 205, 206 and 207 to make this adjustment. Column 205 is for the payments made to the partners in the capacity of employee or service provider. Column 206 is for the interest payments and column 207 is for the balanced business income or loss. Then add the columns 205, 206 and 207 all together row by row and get the total into the column 208. The total of the column 208 will work out the business income of the partnership. If the total figure represents a business profit, take that profit into the page 10 of the Section 1. But in case where it indicates a business loss, enter that loss as a minus figure in the column 208, but do not take that minus figure into the page 10 of the Section 1. Instead, you have to enter 0 in the page 10 and carry that loss into the Schedule 6. Record the loss there. Then we'll come into the investment income. Just as you have done with the business income, you have to consider the total investment income or the loss of the partnership here too. Then allocate the total investment income or the loss between the partners using the column 209. Get the total of the column 209 into the cage 209.5. If the total figure represents an investment income and if there is no deductible business loss to be set off against that income, then take the income into the cage 20 of the section 1. But in case where there is a deductible loss, then first set off that loss against the investment income and carry the balance investment income into cage 20. For an example, suppose that you have a 20 million investment income for the period and also a 10 million business loss. You have to deduct the 10 million loss from the 20 million investment income and carry the balance 10 million investment income to the cage 20 of the return. In case there is an investment loss, that loss enter it as a minus figure under the column 209. But do not take the minus figure into the section 1. Instead, enter 0 in the cage 20 and carry the loss to the schedule 6. You have to follow the same procedure with regard to the other income and also with the capital gains. First, allocate the gains or losses from the other sources and from the realization of investment assets between the partners using the columns 210 and 212. Get the total of the columns into the relevant cages. If the total figure represents an income or a gain, carry those figures to cages 30 and 40 of section 1 respectively. Whenever they indicate a loss, enter the loss as a minus figure in the respective column and enter 0 in the cages 30 and 40 of section 1. Carry those losses to schedule 6 and record the losses there. Now you have filled the cages 10, 20, 30 and 40 of the section 1. So you can come out with the total assessable income of the partnership. For that, you have to add the cages 10, 20, 30 and 40 all together and enter the answer in cage 50. That is the total assessable income from all the sources of partnership. At this point, if your partnership has any qualifying payment, you can deduct them from the assessable income. For that, you have to go into Schedule 5B. Enter all the qualifying payments made by the partnership during the year being allocated to each partner at their respective shares under column 241. Get the total into the cage 241.5 and carry that total into the cage 60 of the return. But be careful in the case where you have made a donation in money to an approved charity. In that case, the maximum deductible amount limits to 1/5 of the assessable income or to ₹500,000, whichever is lesser. Now you have to deduct the figure in cage 60 of section 1 from the figure in cage 50 of the section 1 to ascertain the taxable income of the partnership. Taxable income in the cage 70 of the section 1. The next step is to compute the tax liability of the partnership. Use Schedule 4A for that purpose. Schedule 4A may seem a bit complex for most of you, but it will be not so if you proceed with the schedule step by step. First of all, you have to distinguish between your taxable income. That is, between the taxable income from capital gains and the taxable income from rest of the sources. Enter the taxable income from capital gains under cage 233.1 of the Schedule 4A and the tax at 10% on that income under cage 233.3. Carry the figure in page 233.3 to the page 90 of the section 1. The rest of the taxable income shall be entered into the page 229 of Schedule 4A. Deduct the first 1 million rupees out of that amount in page 229 and enter the result in page 231.1. Calculate the tax at 6% on that income and enter the tax in page 231.3. Then, the KH 231.3 should be equal to KH 232.A.3 and also to the KH 232.D.3 where there is no agro-processing or manufacturing income in the partnership. The figure in page 232D.3 has to be taken into the page 80 of the section 1. In case where there is an agro-processing or manufacturing income, do the adjustment as in the manner provided in the example of the PIT guide and take the end result in page 232.D.3 into the page 90 of the return. Now, you have come with the pages 80 and 90 of the return. So get the total of them into the page 100, which forms the total tax liability of the partnership for the period. The next step is to deduct the tax credits. For that, you have to go into the schedules 3A, 3B and 3C. Schedule 3A is for the capital gain tax payments. Schedule 3B is for the advance income tax payments. Schedule 3C is for the self-assessment tax payments. Enter the relevant dates, amounts paid, and any other details required by the schedule under the relevant columns. Remember here that the total payments of each schedule is directed to the Schedule 4B. Under Schedule 4B, you have to enter all the tax credits and get the total of the tax credits into the page 238. Take the figure into the page 110 of the section 1. Thereafter, deduct the figure in page 110 from the figure in page 100 and get the balance tax payable amount if there is any. That is all about the tax liability of the partnership business. But in case you are having an exempt amount, use the Schedule 2B to record them. Total figure of the exempt schedule has to be carried to the page 130 of the section 1 when it represents an exempt profit. In case of an exempt loss, record the loss under Schedule 6. With that, you are completed with the section 1. Yet, there are 2 more schedules to be filled. They are for the general information relating to the financial statements of the partnership. That is Schedule 7. Do complete those 2 schedules and finish it up with completing the whole return. Now you have the duly completed PIT return with you. Make it sure to submit it to the IRT on or before the 30th November 2023. Taxes for a better future. Thank you.